I know the feeling you're going through. You're trying to make something happen, to build real wealth for the future, but it feels like you're running in circles. You're working your fingers to the bone and nothing is happening. You feel stuck and frustrated. And maybe you even think that there's no hope for you, that it's all just a pipe dream, right? But I have good news for you. Being a millionaire doesn't have to be hard. In fact, there is a way to get there. And it doesn't require you to be a super smart investor or go through tough financial training classes. You've probably heard of index funds. You might even have a few. But what if you could generate wealth for your future with just 3 specific index funds? Safe, low-cost options for investors who want to diversify their portfolios and build wealth over time. Well, I'm Kim, and that's exactly what I'm sharing with you today. Are you ready? Let's go! You've probably heard about index funds. You might even know that they're super easy to use, incredibly effective, and often end up beating the profits of professional investors. But what exactly is an index fund? Really fast, an index fund is a collection of stocks or bonds that represents all of the companies in a particular group, sector, or industry. It uses a formula to calculate how much each company should be valued at in order to represent the entire market. Actually, a study published in 2020 showed over a 15-year period, nearly 90% of actively managed investment funds, those are funds managed by real human beings that don't represent a market segment, failed to beat the market. Simply put, experts who spend a full-time job trying to beat the market are unable to beat most investors that use the index fund strategy. The problem with actively managed funds is that they charge high fees and pay their managers huge salaries. They also have to pay for their time in order to pick stocks and make decisions about which companies to invest in. This means that if an active manager makes a mistake or two, it can really hurt their performance. With an index fund, which is much more of a passive investment, you don't need any knowledge about individual stocks or how they perform. All you need is a brokerage who keeps track of them for you by using computer algorithms instead of human beings, making decisions about which companies should be bought or sold at any given time without any involvement from you whatsoever. So which index fund should you invest in? Well, there are tons of options out there, but here are 3 of my favorites that are poised well for future growth. Number 1 is the Vanguard S&P 500 Index Fund, ticker symbol VFIAX. You might know that the S&P 500 index is a good barometer for the US economy. But rather than buying an individual share of each of those 505 companies, all you need to do is invest in 1 share of the index fund that invests in the S&P 500. That's right, 1 share. And if you're like me and want to invest in stocks that have real potential to grow your money over time, this is a great way to do it. The S&P 500 is made up of 505 stocks that are listed on major exchanges all around the world. It's broken down into 3 sectors: basic materials, like oil, consumer discretionary, like McDonald's, and financials, like Wells Fargo. The sectors make up about 80% of the index, but there are also other factors that go into making up the remainder of each sector. The top 20% by market cap, for example, or the top 10% in terms of revenue growth over past years. The second index fund is the Vanguard Total Stock Market Index Fund, ticker symbol VTSAX. If you want an easy way to invest, the Total Stock Market Index is a great choice. The Total Stock Market Index Fund from Vanguard represents the entire US stock market and is probably the most popular index fund in the world. In any financial or investing-related podcast, you'll often hear people talk about using this fund as a basis for your investment portfolio, and for good reason. With this type of diversified portfolio, you can invest for a long period of time without having to over your portfolio like a mother hen caring for her chicks. Investing in everything means you can experience gains across the entire market. And even if a crazy crash happens, that's actually nothing to worry about. Why? Because first, crashes happen quite often. There have been 3 crashes just in the past 20-ish years: the dot-com bubble, the 2008 financial crisis, and the 2020 COVID crash. But each time, things bounce back bigger than before. Sure, the crashes hurt in the short term, but if you're a long-term investor, you can weather these storms. Plus, they make all of the index funds way cheaper to buy, so you're basically buying the stock market at sale prices. The third index fund is related to technology. Technology is the one thing that we all know will continue to develop in the future. Just look at how much the internet, cell phones, VR, video games, and even electric vehicles have changed in the past 10 or 20 years. So I like to invest with the Vanguard Information Technology Index Fund, ticker symbol VITAX. Sure, technology companies have pretty intense ups and downs, which is exactly why investing across a broad spectrum of them is much less risky than putting all of your apples in one basket. See what I did there? Apples, because apple? Anyway, as I was saying, even though tech has its ups and downs, and this fund even had a big dip during the 2008 housing crisis, over the lifetime of the fund since 2007, it has actually brought a 694% return on investment. 694%! Not bad! So there you have it. Nothing fancy and nothing too risky. Just 3 index funds that, if you are consistent with your strategy and build your portfolio with these as a base, there is amazing potential for growing your wealth into the future. Oh, and I should mention that if you can't afford the price of the index fund, each of these also have exchange-traded fund equivalents that allow you to buy the same thing with fractional shares. So you could get started investing with just a few bucks. If you're just starting out, there's no reason to get too fancy with your investments. You don't need to start by combing through the market and looking at each individual company. With index funds, you have better options. Of course, this isn't an exhaustive list of index funds. Is there even such a thing? But if you're just starting out, you probably can't go wrong starting with these 3 funds that you can hold on to for life. Like I said in the beginning, investing in index funds is one of the smartest investment moves you can make, especially this year. But always be sure to do your due diligence and research your options. Probably the best place to start with that is this video, where I explain index funds in detail and give you all the details. See you there!